Morning and welcome to Coffee Break Accounting with me, Becky Brooksbank. If you haven't already grabbed your cup of tea, coffee, drink of preference, feel free to press pause now, head over to your kitchen, find what you're looking for, and then come back and join me for 15 minutes of jargon-free accounting support for your business. So we are currently looking at series 2, which is our simple systems series. And over the last 5 weeks now, we've looked at everything from why you need a system, how to keep your records, the benefits of accounting software, and then delved a little bit more into the world of zero accounting. And last week we looked in depth at petty cash. So just as a recap, you might not think that your business has petty cash, but actually petty cash spans across the little cash tin you use for your milk float. You can also take into account floats if you've got a retail business, and also if you're a bit more of a cash based business, then you'll also have potentially safes, and anything to do with cash transactions goes through petty cash. So it is open to one of the highest potentials risks of fraud in your business, because petty cash can just go missing. It's relatively simple for somebody to pilfer some cash, so it's essential that you have a system in place to deal with that. So hence I gave petty cash a whole episode of its own last week, because I think for all cash businesses out there, it's important to remember these things. So this week we are going to look at, having issues with my slides this morning, bad debt system. So we're going to look at what happens if you don't take cash for a transaction, and you don't take card necessarily at the point of sale, and you give customers credit terms. Now it's essential to think about this in your business, because so many people nowadays do offer credit terms, and there is a risk that you will never actually be paid for the goods or services that you supply. And any business that uses credit terms, be it 7 days, 14 days, or even up to 90 days and beyond, need to be aware that they need a bit of a system in place in order to help them. So that's what we're going to look at today, okay? Now, what is a bad debt? So a bad debt arises when you're not actually paid for the goods and service you've done. So think about it this way, okay? So Mr. John Tapp, our resident case study plumber, he has done a big commercial install of a boiler and a new heating system into some office spaces. Now they're a good candidate for credit terms because they're a commercial customer. He might feel more comfortable, but perhaps it was a big job, so it could have been upwards of 10 grand. And he's decided to give them credit terms, and he said to them, okay, that's fine, I'll come in and do the work in March, but I would like you to pay your bill in the end of April. So he set up credit terms with them, and then he has subsequently now got to May, and he's starting to think, I haven't had any payment now. They haven't been at work because of the coronavirus. I wonder if they're going to be able to pay me. So he's now identifying that there's a risk of bad debt. And actually, if they turn around and said, sorry, we're having to close our company, we're not going to be able to pay you, there's a bad debt. Okay, i.e. you're never going to get the money for the job that you've done. That is a bad debt. So what is a bad debt system? Well, a bad debt system is a system that you put in place to recognise the risks of offering people credit terms and how you can minimise them. So how you can try and avoid having bad debts in your business. Now, the one thing I will say, I've worked with many businesses in my career in accounting, and there will always be a bad debt at some point. So you can never get away from this fact. If you offer credit terms, there is a risk that your customers aren't going to pay you. But there are some key things that you can do to have a good, solid bad debt system in place. Okay, and I love a good bad debt system. For me, it's one of the most important systems out of the day-to-day financial systems. So if you're keeping on top of your invoicing, you're keeping on top of your paying your suppliers and all your invoices, and you're keeping on top of your bank, great. Those are my absolute essentials, your everyday bookkeeping things. But outside of that, for me, the bad debt system is the next one if you offer credit terms that I would find super important to have in place in your business. And I've worked with many businesses helping them establish a bad debt system, because let's face it, Mr. John Tapp, the plumber, has, he might do plenty of his work up front, take deposits and everything else to minimise his risk, and actually offer very little on credit terms. So his bad debt system doesn't have to be really onerous. It can be a really simple system, and hence the name of this whole module is to show you that actually just having a system in place doesn't mean it has to be super lengthy and take loads of time. It can be really simple, and it's possible to tailor it to whatever size of business. Now, if you're a couple of £1 million turnover business and you do all of your invoicing and customers on credit, then obviously you're going to need a much more robust system in place and to be monitoring the risk a lot more regularly. Okay, so for me, when I'm setting up a bad system with my clients and in businesses that I've worked in over the years, there are a number of key points to think about in the system, okay? And I always say with bad debts systems and customers, it comes from the beginning, okay? So the best thing you can do and the best way of mitigating the risk of bad debts, in my opinion, is to know your customers and communicate with them regularly. Now, I'm not saying that you have to pick up the phone every 2 minutes and chase and say, have you got my payment? Have you got my payment? What I'm meaning is develop that relationship. Okay, know who they are, speak to them regularly, find out how their business is going, discuss how things are, have a bit of chat about the family. The closer you are, the better feel you get for your customers. And that is the key one. You'll suddenly realise one day that you've tried to ring them 3 times and they're not picking up the phone. That's a bit odd. That starts, there could be a valid reason, but that's unusual. You might see all of a sudden that actually they've paid the last 3 invoices late and they've usually been really prompt. Now you can have that conversation with them because you built up a relationship. So for me, getting to know your clients is 100% the one key thing to do, and that starts at the beginning of your relationship. So when my first key point is client onboarding from the start, okay? So start as you mean to go on. I am a regulated accountancy practice, so I have to have an engagement system in place, and part of that system is to ask for ID and residential checks because I've got to cover my anti-money laundering. Now, that might not be appropriate for your business, but actually having something simple that catches all the basic customer information, such as name, where they want to be invoiced, if you're shipping goods, where the goods want to be delivered, and also if you can, and if you have a relatively bigger business, thinking about doing credit checks. Because you might say to somebody in the market, you're taking their word for it. Oh, fine. You can have 10 grand's worth of credit. And actually, if you did a credit check on them through something like Credit Safe, the Credit Safe might say, well, actually, they're a high risk client and you should only really give them £1,000 credit terms. Now, would you then risk the extra £9,000 exposure if a credit agency is saying not? Now, going back to Mr. John Tapp, I'm not recommending that he necessarily goes out and signs up to Credit Safe and pays the money for it. But if you've got a bigger business, a couple of million turnover and you're doing it, Credit Safe or similar are great ways to go. Okay, so always make sure at the point of client onboarding that you're getting to know your client. You have a chat with them, you pick up the phone, you talk to them if you're going to offer them credit terms. Hear a bit about their business, what are they doing, how you can work together, all those types of relationship bits, and document any things that they're saying to you about invoicing and everything else as evidence that that's how they want to build the relationship. Which brings me on to my next point, engagement or terms and conditions of sale. Now, many small businesses just sell. They just sell their service or their product and they don't necessarily have a supporting document behind it. So if you get, I'm trying to think, if you sign up to at XLN Telecom, for example, for a contract, you will get their list of terms and conditions, and in there it will clearly say what will happen if you don't pay. It will clearly say how to raise a query if you've got a problem with them and make a complaint, and it will very, very obviously say the terms of the sale, so everybody can see in black and white exactly where they stand. So if you have a dispute with XLN, the first thing you do is go back to the terms and conditions of the contract to see what legal legs you've got to stand on. Okay, I would say, even if you're a small business, run your business as if you're bigger. There is no problem in having some engagement letter or terms and conditions of sale. And again, it doesn't have to be war and peace, just something really simply that sets out, right, I'm going to do this for you. If you don't like it, this is what you can do about it. And this is how you raise a complaint. But I expect you to pay within these terms. And if you don't pay, then we might do X, Y, and Z. Okay. And it might be worth having a look at what your industry is doing. There's whole heaps on the internet nowadays, so you can find the examples of this relatively easily. So I would say if you can start having some engagement and terms and conditions of sale right from the beginning, and you make them clear to people either by signing them at the start of the relationship or on every invoice. So I know that, for example, Juicens from the building trade, all their invoices, the front side of their invoice is what you've purchased and how much it costs and all the details. And on the reverse of the invoice, it just lists all the terms and conditions again. So it's entirely up to you how you want to do it and how you want to show this. Okay. So always think, have I got in the right document? Do I need to tailor something here? Invoices. So the next key point of the bad debt system is invoices. You need to make sure you are raising invoices on sending them to your clients. If you don't tell them how much you're charging them and how much they've got to pay, they simply won't know. And on those invoices, you have to have some key information, which will be your name, company name and address. It will have a date. It will have their name and address, because that's showing who the liability is between both companies. It will also have the total of the sale, and if you're VAT registered, then you'll need to show VAT and also your VAT number as well. Okay, but if you're not sending those invoices out, they're not going to know when they're going to be paid. And preferably on there, you can do a due date as well. Now, if you use something like Xero accounting software, it will put all these fields together. And actually, if you go online, you can find many invoice templates out there that you can just adapt to put your logo on and everything else. So it's not a new concept. It's been around for donkeys. But make sure that you are doing your invoices. And remember, the sooner you get them out there, the sooner they're going to be paid. Because your credit terms are most likely to be something like 7 days from date of invoice or 30 days from date of invoice. If you've completed the job and you then wait 7 days before you send your invoice, you've then got to wait another 7 days potentially to get paid. But if you send them out straight away, the sooner you will likely to get paid. Okay. So invoices, for me, 100% one of the key points in a bad debt system. Remember, our bad debt system is how to avoid the risk of debts going bad. So the longer you leave a debt, the harder it is to chase. Okay, and we'll come back to that at the end. So the next point is statements. So if you offer credit terms, one of the really good habits to get into once a month is to send your statements out to customers. Okay, now what this is a statement is a list of all the invoices that they owe at that date. So, for example, you may have shipped, Mr. John Tapp may have done two commercial installs in his plumbing business, and he's got 2 customers on credit terms. So it could be that the first Monday of every month, he will send them a statement just saying, these are the invoices that you owe and the due date is here. Okay. Now, for a business that's doing £2 million turnover, likelihood is you've got customers with repetitive invoices. So they might have 8, 10 invoices, if not more, every month. A statement will list all those invoices out for them with the totals and when they're due. So actually, if your customer is in good habits, what their accounting function will do is tick the invoices to the statement. And if they're missing one, then they will say, can we have a copy of invoice 492? For example, okay? If you're not sending those statements, they can't do those first checks. So likelihood is they wouldn't pay that invoice if they didn't know it existed. The other thing about statements is it's a great way to keep people thinking about your business. Okay. If you're sending them a statement once a month, at least you're on their radar once a month, and they're thinking, oh yes, Mr. John Tapp Plumbing has sent me his statement again. Okay, I'll check it all off. Yep, I'm happy, I'm going to pay him. That's a great way to have that communication that I was mentioning with your clients, but without actually having to physically pick up the telephone and have conversations with them. Okay. So statements, again, even if the debts aren't yet due, it's really good exercise to do. So then the next thing is when things start to go a little bit sour. Okay, so for example, you've got a client who hasn't paid and it's past the due date. You've waited another 2 weeks maybe and you still haven't had anything with them. What do you do now? If you are going to pursue it, and go to the stage of CCJ, what they say, and CCJ is county court judgment, what they say is that you have to have given your client due cause to pay. Okay, so my bad debt system is similar to many out there, and I would always take this course of action. So I would send the invoice with the due date on it, and we're going to work to 30-day terms in my example. I would send that invoice. I would let the 30-day terms pass and send them a statement at that point. And then if they haven't paid 2 weeks later, I'd just give them a little chase email, okay, and just send the statement again and say, oh, just noticed that you're over your due date now. Any problems with the invoices? When am I likely to get paid? Keep it quite simple. Here's a copy of the statement. Here's the copy of the invoice if you've got any problems. If they then don't pay for the next 2 weeks, I would start to consider whether I need to put this account on hold. So it might be that you've been trading with them because you think, oh, okay, it's a bit unusual, they haven't paid, but do you know what? I'll still keep trading. They're not up to their credit limit yet. But if they've got an invoice that's now over another month after it was due and they still haven't paid, I would be seriously considering whether I should be trading with this client and building up a bigger debt with them if they're not going to pay. So I would put them on hold. Okay, which you can either do it in two ways. You can send them a letter out saying your account is on hold. And when I say send a letter, you can send an email by all means, as long as you've got evidence that you've sent something. Send them communications that say your account is now on hold. You won't receive any goods until the invoices are paid. This is the amount that's outstanding. Please pay within the next 2 weeks. And you'll notice I keep it quite a short time frame. So if it's 30 days that they got to pay, I tend to do something every 2 weeks. If it was 7 days that they had to pay, I'd do something every week, okay, to condense down. So if it's 60 days, then I'd probably leave it once a month and communicate them with them once a month. All right. So I would send them a letter basically saying your account is on hold. If they still don't pay or you don't hear anything from them after another 14 days, I would send them a payment plan. Okay, and what payment plan does is splits their debt into what's deemed to be easy payments. Okay, and again, you need to show that you're giving them just a reasonable length of time to pay these invoices. So, for example, if it was a 10 grand debt, I'd be tempted to do a payment plan over 3 months for a third of the amount each time. Okay. Similarly, if it's a 5 grand debt, I might split it into two and say 2,500, 2,500 payable at the end of this month and the end of next month. Okay. Now, if it was as simple as they only owed £500, then potentially I wouldn't necessarily offer them a payment plan. But if in your business the biggest that people pay is £500, then obviously, yes, offer them a payment plan for £250. Okay. And it's all relative to the level of sales and size of sales that you're used to doing. So by all means, send them a payment plan. And in that payment plan, make it clear that if they don't pay, what the consequences are. So I would say if they don't pay, the consequence is they will get a final demand for the amount in full. So you're being lenient with them by offering them choices to pay, but if they don't pay, they'll have to have the final amount paid in full. Okay, and say you'll communicate this with them. But still be firm, be factual, don't get emotional, and usually people will start paying on a payment plan. Now what happens then is the final step. If they don't then pay, or they pay one amount and default the next amount, I would go straight to a final demand. Okay. And in this final demand, I would be simply saying, you need to pay X number of pounds by this date, otherwise we'll be considering further legal action, and leave them to pay. Okay. And 9 times out of 10, you will get a response from that. Before I go to that final step and issuing the letter to them stating that, I will try and pick up the telephone and speak to them beforehand, okay? Because you don't know what the situation is behind the scenes. They could have had a bereavement in the family, there could have been ill health, anything like that. But always try and pick up the phone if you can at that point to say to them, do you know what, let's have a conversation because this is getting really serious now. But still follow it up with a letter, because you need to be able to prove that you've tried to recover your debts if you go down that route. Okay, so the final stage then, if they still don't pay, what do you do about it? Well, the hope is by this point they've paid and your bad debt has gone away. If they don't pay, you've got three options really. One, you write it off. Okay, you take that debt out of your books. If you take it out of your books, you can take it against your profits. So you'll reduce your profits by the level of debt, and that's an allowable tax deduction. Okay. The other option you have is to raise a CCJ or a county court judgment against that supplier. And you can do that really easily online. It costs some relative to the amount that you're trying to claim. There is a cost involved, but you can pass that cost over to your customer and it will be swept up into them. Now that's saying that they're going to pay the CCJ. Sometimes you don't, and you do lose the court fees in doing this. But 9 times out of 10, again, if you did a CCJ, they would pay you, or they would send a statement saying when they're going to pay you, and it would be in the hands of the courts. Now, the other option you have, aside from doing nothing or raising a CCJ, is to go to a debt collection agency. Now, if I'm honest, I'm not a big fan of debt collection agencies. I find that quite often the debts still don't get recovered, and depending on the level, sometimes there really is not much point to it. If you're talking significant debts, then I would take advice on it, but if you are talking smaller debts and this, that and the other, I would say that CCJ is the more cost-effective way for you to go. Because even if you go to a debt collection agency, there is still a risk that you're not going to get that money anyway. Okay, so depending on the level of debt, take the right level of advice when you get there. But you do have 3 options: do nothing, write it off, put a CCJ, and then or go to a debt collection agency. So those are the key points in the bad debt system for me, and how you can tie a system together. Okay, so I've given you a whirlwind review of the bad debt system and what a bad debt is, and your takeaway task for today is to go away and outline your process for onboarding your clients and for your point of sale to the payment system, and see where you can make changes, see where you're exposed to your bad debts and where your risk lies, and see if there is anything you can do to hone that process and reduce your risk as a business. So thank you very much for joining me today for Coffee Break Accounting. Hopefully you've enjoyed the system on bad debts. Next week is our last session in this series, and we are going to have a quick look at fraud, to raising your awareness of fraudulent transactions that may occur in your business. So final tie up on simple systems next week. Thank you very much. Wishing you all well, and I will see you next week for our last episode in series 2. Take care. Bye.